I bid you all good morning, good evening, and good night. Thank you for watching Canadian Housing Market Q1 2021. Thanks everyone for joining and following the housing discussion that we've been having on this channel for over 6 years. Where is it headed? Affordability levels. What is happening? Today we're going to focus on Canada Q1. And what is happening in Canada Q1? Well, there's a lot happening. And let's take a look at what the articles are telling us, what the banks are telling us, and what people on the ground are telling us. So let's take a look. So here it is, guys. This is one. It's actually from RBC, Royal Bank of Canada. Here's the deal with this one. They're not lying on this one. Canadian housing market already on pace to have a record year in 2021. And following a year like no other, Canada's housing market is poised to have a record-setting 2021 with price momentum and demand forecast to continue according to a new report from RBC. So here it is right here. So let's get to the right here. Home price gains. While home price increase stayed on track throughout the pandemic, which is really bizarre with everything closing down because it's the private sector. The public sector is thriving right now, and the mask police are getting more mask police are being hired, and things are changing. As every hour things are changing. The pace quickened, with national aggregate benchmark rising 8.5% in 2020, or almost 5 times the 2019 rate of 1.8%. So this is the benchmark aggregation for the nation. Now, we need to talk about that because it's a lot of people leaving the big cities. We discussed this 2 years ago on the channel, where people are mass exodusing Vancouver. Then you start seeing that pattern in 2019 in Toronto. And lo and behold, the pandemic sweeps in and makes everything make sense now, because now we have this huge invisible boogeyman. So we expect this solid momentum to be sustained through 2021 with a gain of 8.4%, which should be within numbers, because of the lack of supply that's on the markets is driving up, obviously, the demand. And we've had a phony supply and demand market since 2010. And that's what's been driving up prices and lots of laundered money in Canada. Remember, guys, that article I bring up every week, Canada would be in a recession without money laundering. Well, there you go right there. And if it wasn't for the billions of dollars to be rolled through our real estate, we would be in a lot worse of a recession. Housing recession. Personal, economic, that's different. Housing. Our economy is like 85% based on housing. So is Australia and every other English-speaking country. So here it goes, guys. So there it is right there. So there are the graphs right there to show you where things are headed. There's the home momentum prices for 2021. There you go right there. There it is showing you right there, 2017, there's 2018, and then 2019 things picked up right quick in a heartbeat. And the price gains are expected to stay firm in most provinces in 2021, bringing property values up 9.6% in Ontario. Again, these are the rural areas in Ontario, okay? We're seeing condos take a punch in the gut. In Quebec, 8.6%. Now, Quebec is seeing a massive uptick because of people leaving Ontario and other Toronto and major cities and moving to Quebec. In BC, 8.3%. Again, BC is people moving to Burnaby, Surrey. No, moving out of Burnaby and Surrey and moving into the interior like I did 4 years ago. In Nova Scotia, 9.5%. Nova Scotia is seeing a rare phenomenon there of vacant homes. In Nova Scotia, lots of empty homes owned by foreign investors, and that's driving up the prices in Nova Scotia. And also in Prince Edward Island, too, they're seeing a rare phenomenon of bidding wars and empty homes. So there it is. And in 9.5% in Prince Edward Island. However, the outlook for the prairie provinces remain comparatively weaker. So we're looking at Manitoba, Regina, Saskatoon, and we're looking at Alberta as the mountain oil. The economic challenges facing the region continue to weigh on prices through RBC expects an increase in Alberta is 0.9%. So that's why they call Edmonton Deadmonton. It's like they're laying off people. They're laying off so many people in the public sector. If you're a nurse or a doctor, a surgeon, a pediatrician, or something like that, and you deal with health, your job may be on the line due to the empty hospitals. That's a major issue right now. So Newfoundland and Labrador is the only province which RBC forecasts price drop at negative 0.4% for the 6th year in a row. No big deal, but there it is. There's Newfoundland and Labrador right there. There you have it right there. So prices to rise in all but one province. So they're predicting a price rise. But now what's going to happen with people that can't afford to make their payments as we see more and more people starting to hedge or itch toward foreclosures? Or is the government going to give people more money to keep their, or is the government going to start sending food packets out to homeowners so they don't default on their home payments? Because our economy is based on homes now. It's not based on buy, sell, and production and exporting. It's none of that. It's mostly home, right? Canada exports homes to China. We don't export them as in we put them on a boat and ship them to China. We just build homes for China, right? That's why during the pandemic, all construction, private sector, not public, private sector construction was deemed as mandatory. Why? Because it's going to keep our economy afloat. The second you start building homes for foreign investors, you're screwed. The country's shut down. That's why frontline construction workers were making sure that projects finished on time, because that would be a deadly situation. So, and then it goes on to say, this is a really good article, that there's the annual sales reach new high. Okay, remember guys, when you see a lack of demand, you start seeing prices go up with it too. So there it is right there. So there's 2022. Wow, they're already forecasting there. Wow. Home resales in Canada in the thousands of units. So there it is right there. So they're pushing. They're pushing for activity to grow in almost all provinces. There it is right there. Okay, so you're going to see buying and selling, of course. And then potential risks at the bottom. Hogu says also expects interest rates to stay low in 2021, though he sees long-term rates starting to creep up slightly higher this year. It's important to remember that when rates are rock bottom levels like they are today, it doesn't take much of an increase to jack up service costs, so the slightest rate increase could compel many buyers to exit. So what about property taxes? They're going up through the roof. These cities need to maintain, especially the cities where people are leaving in huge numbers, they need to maintain some sort of income, because a lot of these blue-collar workers that are leaving to the interior or other parts of the country are taking with them their tax dollars too and spending it in another province. That's going to hurt a lot, and that's going to, the municipalities and the cities are going to have to figure something out. So they might start a municipality tax. So you pay your federal tax, your provincial tax, and you might have to pay a new city tax. Yeah, added value tax. Keep that in mind, guys. You heard it here first. Now, let's move on. Empty Richmond homes net $10 million in speculation tax. So, Richmond is considered like Little China in BC. It's south of Vancouver, and I think it used to be like Little Europe, like back in the 90s, and now it is Little China. And what happened, 20% of property paying speculation vacancy tax in Metro Vancouver in 2019 were in Richmond, where they paid about $10 million altogether. So this is money going back into the province for vacancy condos. That is a big deal. These are the ones that they have registered, right? There's a lot of properties that are not connected to the grid, like electricity, that they try to cut and maintain, and try to get it so it's not, you guys what I'm saying, so it's not hooked up to anything, cable, internet, nothing. And the cable, internet, and service providers raise the prices for us that actually use it because of the lack of hookups that they have in the empty units, which they paid to send a wire to their apartment, right? You know what I'm saying? So we're paying for that. The reason why internet's like $200, I pay $145 now a month for my internet. And there's people in the States that pay $35 a month for their internet. So the problem is, in Canada, they're raising it because of the lack of connection on the grid. If all these places connected to their internet, I don't think you'll see a drop because they're already making that money. But you know what I'm saying, right? So there it is right there. So the number of empty homes in Richmond was half the number in 2019 compared to 2018. But the amount of tax collected still rose. So that's what they have right now. Unless they are, you know what I'm saying, right? They're renting them out now. Majority of Canadians will work from home, and it will change the cities. Again, remember, guys, get out of the city. It's a ripoff. I've been saying that for 3 years now. I've left the city. Watch my little series on my channel called Got Out of the City. I'm painting garage doors, enjoying the view, spending time with the kids, big backyard, playing soccer. The city was just the biggest scam lie, especially in Canada. Americans will be like, oh, I love living in Miami. Oh, I love living in Houston. Okay, that's different. In Canada, it's more expensive to live in these cities. In Canada, it's like you're paying an arm and a leg, and then, you know, you got crummy weather most of the year. So, and it will change cities. Yeah, cities will transform. The vast majority of Canadians want to work from home, according to a new analysis from Canada's largest bank. Now, here's the deal. So there's employees, there's employers. Likelihood of Canadian companies offering remote work post-pandemic. So after the pandemic, what are they looking at? Very unlikely, 24%. 4.9, so 24.6% very unlikely. And then neither likely nor unlikely, 6.2. 50.3% not relevant for the business or organization. Why? Because that's all service sector. That's all services. So the people need to go into work. So they're not going to do it. They won't do it as much. And if they do, you're going to get a special tax put on your pay. They will add a special tax to your pay. A special one for working from home. Fewer than 1 in 5 employers are on board. So fewer than 1 in 5. So, yeah, it's not going to fly. They're not going to allow that. And they're going to add more added value tax from working from home. Canada's mortgage lenders have set aside a record amount for bad loans. Now, this happened in New Zealand 3 years ago, where the Reserve Bank was telling New Zealand you need to have at least 8% of what you have out there. I don't think Canada has 2% in their coffers, in their safes. I don't think they have enough money to cover all the bad loans. Remember 2-3 years ago, guys, all the bad loans, people lying about income. Not the people, the lenders lying about income so they could give, oh, it's an opportunity, you can make money off his house. This has become a major issue, where people that took interest-only mortgages, people that took the low-rate jumbo mortgages, now their rates are going to go up. There's all kinds of crap happening, and they need to allow or set up for credit losses. And they need to set up to leverage against any defaults or any bad debt, right? Okay, now look at what's happening. More private sector jobs. Starbucks is closing 300 stores in Canada by March. Again, Starbucks will be closing locations. 300 stores across the nation. So let's say 4 employees, right? Per store. I think there's more, but let's say 4. 3, 6, 9, 12. That's 300. Wait. That's 3, 6, 9. That's like 1,200 people. 1,500 people. I'm being very conservative saying 4 employees per store. There's more. Let's say 5. So that's 5, 10, 15, 20. So that's 1,500 employees out of work. That's a lot of private sector jobs. And these people pay rent, and these people live in these cities. So these are more people that are going to have to leave the city. Now look at what you could buy in Toronto for $1.4 million. You could buy a hammock floor to sleep on. There it is right there. And that's what you get right there, a room. That's what you get, a room. And a place to sleep on upstairs with a hammock. And it does look nice. I mean, mind you, it does not look bad at all. I'm not shaming or bashing. I actually like the look. I like the brick. I like the layout. I like the sitting and eating area. I like everything, right? And I think, look at that view from there. It's a nice view. I think it's a nice place. There is the video right there. That's all you get, though. You get a room, right? So you get a place to sleep up there. You get a view of the outside. I think it's beautiful. I think it's nice. But is it worth $1.4 million? Wow. So in a bit, we're going to look at what you could buy in the South, warm weather, for 100 grand. Okay, Canadians believe more in the housing market than the overall economy. We covered this last night on our economy show last night, which got really sidetracked, and it became about what's happening in America. But anyways, Canadians believe more in the housing market than the overall economy. That is dangerous. That means housing will never go down. That means they'll find a way to keep housing going up, because it's the economic backbone of Canada and Australia and New Zealand and the UK and California and Portland and Oregon, and Washington State and Massachusetts and New York, and everyone's leaving those cities and moving into Texas. Amerifornia is coming, Americans. I'm sorry, Amerifornia is on its way. Anyways, you got a new president. He's going to usher in a California a lot quicker than you guys could imagine. All right, so there it is right there. And 2021 will remain a seller's market, says experts. That's the Toronto Sun. That's coming out of Toronto. Plus 7 trends that could impact the real estate market. So what could impact the real estate market? So let's go here real quick. Number 1, virtual become reality with virtual tours. Moving out of the city. That's a big one right there. That should be number 1. Moving out of the city. More first time buyers. But I don't know if, like, in the province of British Columbia, they can't find Canadians to be first-time home buyers. They can't. They can't find... That's why Australia is offering $50,000. Look at the video I put up. Australia is offering $50,000 to foreigners to come in and buy a house in Australia. Foreigners, not locals, right? Okay. Co-living will be increasingly common. So, like in New Zealand, 2-3 years ago, we read an article on the channel where there was 44 people to one unit. Yeah. The rise of private sales and birth of fractional ownership. So you're going to see more and more people owning pieces of property because it's so out of reach. Back in the 80s, the average person packing groceries could pay a mortgage off in a few years at 6% interest. Now, you're packing groceries 2,000 hours a week. Because that's just going to cover your rent, and that doesn't include food, right? And iBuyers in Canada, already the vogue, okay, south of the border. So a lot of people are, I don't know what's happening with that. I'm not going to get into that. But there is a demand for luxury homes spike. With everyone getting laid off and no jobs, again, it has to do with foreign investing. It all leads back. Follow the money, guys. Follow the money. All right, guys, so we were looking at this. Is this thing worth $1.4 million? You tell me. Let's take a look at here. We're looking at the south. I like the south because it's warm, and you got land with your house. Look at that. Log cabin, 5 bedrooms. Yeah! 145 grand. Oh, Mike, but that's 145 grand American. 200,000 Canadian. Or look at this one, colonial type house with a little atrium, this little atrius piece here. I like that. You can park your motorcycle there. 69 grand. Yeah! Look at this one. Looks like the White House. 2,800 square feet, 5 bedrooms, 124 grand. And it's been on Zillow. It's got a price cut of $15,000. I don't see people lining up and bidding on this. 169, 8 bedrooms, 4 baths, 3,400 square foot home. Look at this one, 68,000 bucks. Woo! 5 bedrooms. Oh, look at that one. I'd move into there because you got to remember, you move into a house like this, you got to remember the neighbors you're going to have. They're going to have homes like that. I could guarantee they will have homes that look like that on your street. Okay, 149 grand, 5 bedrooms, 3 baths. Woo! That's in Alabama. And Alabama's got pretty decent weather all year round. Woo! So there it is. I think once the healthcare system in Canada collapses, I think there's nothing to stay here for anymore. I think a lot of people will make their way down to the States, and that's why I think borders are closed. I think border closures is to stop people from traveling and look, oh, we could sell our house in Toronto and we could buy we could buy 7 of those. Woo! Anyways, guys, let me know what you guys think in the comments below. Look forward to reading. This is our Canadian Q1 2021 wrap-up of where things are headed. You guys can see where it's headed. The writing is on the wall. More people are losing their jobs, and more people are falling into hard times and depression. Guys, stay strong. Be vigilant. Keep your eye on the prize. Lots of love. I have spoken.